All right, Ben, I am so excited to have you on the show today. I have been looking forward to our conversation. So thanks for being here.
Oh, thank you very much. I'm excited to be here too.
Yeah, so I would love it if you would talk to us a little bit about TaxRx and what you guys are doing in our ortho industry, dental industry, just in general. Let's start there.
Yeah, sure thing. TaxRx Group we're a team of accountants and tax attorneys and otherwise. I'm a dentist and attorney who really focus in healthcare tax specialty savings. So that's in a nutshell what we do. Like most of these practices that we're talking to, it's really about who you work with, though, right? We have this amazing team. I started TaxRx Group a number of years ago. I was lucky enough to bring on Alfonso Anderson. He is a true blue tax attorney. I always say if Captain America was a tax attorney, that would be Alfonso.
I love it.
Yeah, starts out every day with, okay, how can I save the American business money? His motto is no credits left behind. We have Nick
Love it.
Vicenti, who's a JD CPA. We have Kevin Colvin. We have a number of guys who are just experts in their field and really allow us to do that thing to really serve as an adjunct to the accounting team, come in where we're needed and help out docs that way.
Yeah,
Yeah.
that's great. And I love it that I'm curious how did this come about knowing that this isn't where you started?
Yeah. It's been an interesting pathway. I did not plan to be here when I went to dental school so many years ago, but I love where I'm at. When I went back to law school, it was after I'd owned practices and practiced for 15 years and sold
Mhm.
practices. And I come out of law school, and my daughter, who was a teenager at the time, I really think she just summed it up so well. She said, "Dad, we're so proud of you. You're the two things most people hate all wrapped up into one at this point as a dentist and attorney."
Oh,
But yeah, the kids keep it real. But I really enjoyed practicing dentistry transactionally. I was really interested in what went on behind the scenes.
mhm.
What led me to law school, focused on healthcare law, healthcare transactional law, and came out with a practice that defended docs and in different scenarios and helped with transactions. And then before long, everyone started asking me tax questions.
Yes.
And it was an area that I had no interest in at all, was taxes. But I had to become the expert, and then it became interesting. There's so much out there, and there's so many. You think there's just one way to do this or one way to interpret it, and it's just might be true for a lot of businesses, but in the healthcare world, there's a lot of opportunities that just aren't taken advantage of.
Yes, and I am so thankful for you and your group for doing this because I know it helps hundreds and hundreds of doctors that are out there. And as you and I both know, taxes just in general, whether it's on a personal level or a business level, it's scary, it's
Yeah.
overwhelming, and a lot of times you just do not feel like there is a good place to get good advice. And I know, especially a lot of my younger docs, they want to crowdsource everything. I got a problem. Let me go out there and throw it out there. But I don't really want to give out all the details because I don't really want to show my weakness either. And I think so many times that can get our docs into trouble for sure. So I'm wondering if you
Yeah.
wouldn't mind, and I'm going to have you do this kind of on a two-part here. Maybe
Yeah.
talk a little bit about some advice you might have for younger doctors that are doing startups or acquisitions and just things that they should be aware of from a tax perspective. And then maybe switch gears and talk to our more seasoned doctors out there and maybe things that they need to be paying attention to. Because I feel like this is the side of our business that none of us really want to open up that door and stare
Yeah.
too far into that closet of
Yeah.
taxes. We want to just think about it and move on with it.
Yeah. Absolutely. And I get it. I was there with my practices and my team is okay. What I'm focused on is, oh, I'm bringing in this new product, this new bonding agent, this new device. I'm training my staff. I'm watching my overhead. I'm making sure my new patients are taken care of and the numbers where it should be. I'm looking at my production and my collections, and I could manage all of that as a dental business owner. And
Yes.
and then the question is, you hit this period in either March 15th or September 15th where your taxes are due, and I didn't even want to look at it. I knew it was ugly. My accountant would send me something, I'd sign it. If I peeked it behind there, I saw all those zeros and I thought, oh my goodness, how did
Yes.
this happen? I've been working so hard. I might as well have just stayed home for a month
Mm-hmm.
this year. I'm paying so much in this. There's got to be something, maybe not a destroyer, but something named after me with all the taxes that are going out for this. But I get it. I get it. It's not an area you want to look at. And I think that's the first key is we are so used to being intelligent people, right? And solving problems that we sometimes apply that further than it should be. And that was really the genesis. If I'm going to be honest, that was the genesis of law school for me. I did one
Mm-hmm.
of my biggest transactions, and I was pretty sure I didn't need an attorney to look at that contract. I could just read it and understand it. And lo and behold, words like consideration don't mean the same in the law that they do in real life and all these other things. And it came back to bite me.
Oh,
So that would be where I would start. You're so wise, Jill, when you say, you know what, there's a certain amount that crowdsourcing is great for. But unless you're willing to say, this learning curve of learning taxes is something I'm willing to undertake, that's the point where you need to reach out to an expert.
yes.
So let's start with your young docs. If you're starting up a practice, you have a great opportunity with your taxes. It's all about that structure. And we all had a little primer in dental school that told us what a corporation was or something. But the real key with that corporation is that your corporation gets to pay expenses first, then taxes.
Yes.
Whereas as an income, if you're a W 2 employee, you have to pay taxes first, then expenses. And that's a huge change in
Mm-hmm.
what's left over at the end of the day. So there are a couple of ways that you can set up your corporations in the beginning of your practice that are going to be very beneficial from a tax perspective. And one of those is just to say, you know what? I'm going to have a business corporation, which maybe holds my work and my staff in it. And I'm going to have an asset corporation, which maybe holds my cone beam or my intraoral scanner or whatever, my 3D printer. And I'm going to have these two separate corporations. And you might say, why do that? Why the headache on that?
Yes. Let's talk about that.
Yeah, there's two reasons. One of them has nothing to do with taxes. It's a liability management reason.
Mhm.
If I have a patient who's unhappy with me and they want to come after what they can get from me, they can only get what is in the same box as the thing that made them unhappy, my work essentially, or my staff, or whatever. That is the high risk area. And that's where your assets, you don't want to keep much in there. You have a lot of great tax deductions in there. But if I can pull some distributions, if I can pull my cone beam, if I can pull these high value ticket items into another entity, I've just separated the risk. That means that
Mhm.
any attorney who's trying to come after me for a big payday is already limited to what's in one box because this great thing called a corporate veil keeps them from going into this other box here. So that's a risk management. Really nothing to do with our conversation for today, but something to consider for sure. From a tax perspective, what I can do with my equipment holding entity is a few things. One of them is I'm creating a tax deduction because I'm creating an expense, right? I am renting services from this other one.
Yes.
So that's a big benefit. And who's running this other one? If I have a family member in particular, anyone, could be your kids, could be your parents, aunts, uncles. If you are financially responsible for any family member, turn that into a family management entity. And there are
Sure.
just so many things that we can do from immediate tax deduction, but also tax planning, retirement planning, getting money into the hands of people that you're going to send to anyway without the burden of taxes on them.
Hmm.
So I won't get too deep into your startups, but that's really probably a place I would start is look
Yeah.
at your setup. Do you have your corporation set up the right way?
Yeah.
Acquisitions are somewhat along the same line that anytime you've got a transaction happening, whether it's a house or practice or anything like that, there's a lot of money changing hands. And there's so much money sometimes that it's like that black box of our taxes, right? It's like,
Right.
I know someone's reaching in and taking a piece here and taking a piece there, but whatever, we just got to get through this. But that's a real moment in time that if you are purchasing a practice, you should definitely talk to us. There's no general kind of one size fits all, but there's a lot of specific things that
Hmm.
our team can look at and just with a quick consultation, see, are we going to be able to be of value to you or not? So that's
Yeah.
what I'd say with the transactional
Sure. Sure.
event like
That's
that.
great.
Yeah. Okay. Any questions about the startups, or should we move on to the
Yeah, let's just
docs?
keep on going because I'm sure everyone's on the seat of their seats and on the edge of
No,
their seats. Yeah.
nothing more thrilling than taxes. This is real money, though, so we do have to remember
Yeah.
that. It's like we're
Yeah.
having a conversation about real money.
Yeah.
When it comes to an established practice, and really this could be a young practice too, it goes back to this question of the team. Who's on my team with
Mm-hmm.
this? Your accountant, you got to have a good accountant. That's square one. And there's a ton of them out there. We work with hundreds across the country. They are like your general dentist, like I was. They're going to handle the recall. They're going to handle the standard things that come to you. You're going to see them twice a year, maybe once a year. You've got to have a specialist, though, too. And that's where TaxRx Group comes in as tax attorneys, is we're going to handle those things like orthodontics that should be in the hands of a specialist. And we do that either a la carte or comprehensively. Let's talk about just two things a la carte that your doc should be considering.
Mm-hmm.
One of them is the one that most people know us for, and that's the research and development tax credit.
Yes, that's a good one.
Yeah.
That's a good
Yeah,
one.
yeah. It has been so good for so many docs. I mean, we have over 400 orthodontists that are clients with us, and so we're really excited about the millions of dollars we've been able to save them in taxes. As with any area of specialty, you got to do it the right way, right? You have to go in this
Right.
very carefully. And I think if there's any barrier to entry, that's it right there. Because there's a lot of groups that are maybe not as careful as
Mm-hmm.
they could be with this. But we're to the point now where the American Academy of Dental CPAs is even recognizing and saying, here's the R&D tax credit. Here's how you should put it in your taxes. So we're past the point of this being a new thing or a
Yes.
novel
Yeah.
thing. It's something that you should be considering. And the way it works is basically like this. You have to be engaged in trying to improve the central business component, which for orthodontists is either clear aligners or fixed care or one of those things. In the process of trying to improve this, you're bringing in variables. So what's a variable? Maybe it's a cone beam. Maybe you didn't have one before, and now you're doing a CBCT image on all of your patients. Why is that a variable? Well, from a business perspective, you don't know if that's going to yield improved outcomes for your
Right.
patients.
Right.
You don't know if you're going to be able to train your staff to use it efficiently. You don't know if the expense is going to be worth the investment on it. And it is hard science based. And that's one of the keys. It has to be hard science based. But it doesn't have to just be equipment related. It could be procedurally related. Let's say you switch your bonding agent, your composite. Well, how is that research and development? There's uncertainty there, right? You've tried out this new product. Why? Well, I don't know. Maybe it's less expensive. That's a perfectly valid reason under the R&D tax credit to evaluate a new product. Maybe you've got a lot of debonds, and you want to see if you have a reduced number of emergency visits after this.
Mm-hmm.
Any one of those reasons is valid, plus 50 others we can tell you as we start to talk with you. But really, what you're doing is you're trying this out with patients through a process of trial and error, sequential improvement, evaluating your outcomes to see if this is something that you want to have in your practice. That is more than sufficient to satisfy the boundaries of the R&D tax credit, as long as you. I think that's one of the key things a lot of our docs say. Am I really doing R&D? And the differentiation there is you don't have to be expanding orthodontics in home. It's your practice centric. If you're doing something that's new for your practice, there's R&D value there, most likely. As far as calculating credits associated with that, we usually go in, we identify what docs have done in the last 3 to 4 years that recognizes changes to the way that you deliver care. We figure out who was involved, how much time was spent there. Really, with our orthodontists, we're typically seeing somewhere between $20,000 and $75,000 a year of annual credits. Yeah. And I think it's really important to point out what a credit is. We talk about deductions a lot.
Mm-hmm.
And for every dollar of deduction that you spend, essentially you buy a new piece of equipment, for example, it takes 3 deduction dollars to equal $1 off your taxes, which is good. It's great. We're not going to complain about that. But a credit dollar is a dollar for dollar value. So if we find you a $20,000 credit, that means that your taxes just went down by $20,000.
Wow.
Yeah.
Wow.
That's a huge one. We always, if you haven't started this yet, or if you have, it's really easy. You can go back 3 years and capture money that you've left on the table. So we always like to start looking at this year, but also the past years, 2020, 2021. What did you change then that would result in a check from the IRS, which is a great change, right? We send
Right.
them a lot of money. It's awesome when we can go out to the mailbox and get a check from the IRS.
Wow.
Yeah. So the R&D tax credit's a great one. But yeah,
I have a question. I'm sure you've got
please.
more to give us. It makes me start thinking about, especially with younger doctors,
Mm-hmm.
is there like a prime time for them to start thinking about this? And I know, especially in our startup practices, we'll say there's the deduction versus the credit for
Mm-hmm.
equipment when we're doing a startup practice and all of that. But is there almost a way that we can double dip here?
Yeah, no, I like the way you put that. That's really good because we can maximize it. Maybe I won't say double dip and stay out of trouble, but
Well,
we'll
within
maximize the
safe
credit value.
parameters. Yeah,
Yes, yeah.
that's definitely an attorney phrase right there.
Thank you. I did learn something from law school. Yes, absolutely. So one of the things to remember is that the R&D tax credit, without getting too deep into it, has a safe harbor version of the calculation. And that's the one we always use for our clients because it's a safe harbor. There's going to
Mm-hmm.
be far less scrutiny in the safe harbor calculation than the other one. But the really neat thing about this is it's cumulative and it recognizes an increase in R&D expenses over time. And it results in a very large credit as you're able to show that, oh, last year I spent X on this. This year I spent X plus 50% on this. And really that, since it's a wage-based credit, that follows the pathway of progression for a practice growth anyway. So young doctors should start this right away. Absolutely should start the R&D tax credit. A group like ours, we're paid on essentially as a reflection of how much we're able to identify as your credit.
Mm-hmm.
So
Mm-hmm.
it's not like you're going to be in the hole for this big expensive thing that's outvalued what your benefit is. It's just going to be a fraction of that. So I would start right away with R&D. And the other thing that's really neat for startup practices is R&D recognizes that there's a lot of qualifying R&D in the beginning of a business, and they do what's called a
Yes.
qualified startup. And what this special category does is if you don't show enough revenue to have a tax burden at the end of the year, let's say you don't have a credit, you
Mm-hmm.
don't need a credit, which by the way, those credits can roll forward for 20 years. So you're going to
Oh,
need it sometime. But let's say for whatever reason, you don't need that credit
yep.
after year one because all of the equipment, you mentioned Jill and everything like that. In those first 5 years, you can apply the credit towards offsetting a tax liability that every business owner has, and that's payroll taxes.
Mm.
So you can have it wipe out your payroll taxes in the first 5 years of business.
Oh my gosh, I feel like you just dropped a huge bomb on us. I
Yeah.
think that is like knowledge bomb right there. And I am sure you just made all of my startup docs perk right up and say, this is genius. Because
Yeah.
I feel like a lot of times, especially at conferences and whatnot, I feel like when we have discussions like this, and I see it even in our in the groups and whatnot, I feel like it's so geared towards existing doctors. And I feel like many times our startup docs are sitting in the wings listening to the discussion, not thinking that it applies to them. So I
Yeah.
really appreciate you saying this because I am sure that a lot of docs just went, like, why didn't somebody tell us about this? And
Yeah.
that this applies to us just like it does the docs that have been in practicing 8, 10, 12 years, whatever.
Yeah. Yeah. It's a good one. And we see a lot of benefit from that. I mean, for a real quick, just to give a real quick one for your existing docs, Maury. And by the way, there's a ton. Like I said, we evaluate lots of strategies for
Sure.
each one of our docs when they come on board. And there are some that are just so easy and low hanging that we won't even really go into those right now. But one that anyone who's buying real estate, whether it's a commercial piece of real estate, your business, your practice location, or an Airbnb, or a cabin in the mountains, anything that's not your primary residence on there, should really look into cost segregation. Is that something you're familiar with at all?
No,
Okay.
no, I'd love it. I was hoping you'd just keep on going.
Yeah, no, for sure. Really, okay, so you buy a piece of property and it's essentially broken into two values there. You have the value of the land,
Mm-hmm.
and you have the value of the house or the building on top of the land. The land value just stays stagnant. But that building is going to wear down over time.
Mm-hmm.
It's going to break down, it's going to need to be replaced. and the government allows you to depreciate the total value of that building, and usually slots you in a straight line 30-year depreciation, which means, let's say you buy a $1 million property, 300,000 of that is land, 700,000 is towards the building, that you'll be able to deduct the value of that building over 30 years, $700,000. That's fine, that's good, but real value comes if we can push a lot of that deduction towards the front. And using an engineered cost segregation study, which our team engineers, we can go in there and using the IRS categorization, we can say, okay, the carpet's not going to last for 30 years.
Mm-hmm.
The cabinetry, the electronics here are not part of this 30-year bucket. And so they've figured out a 5-year bucket, a 7.5-year bucket, and so on. So by doing this study, we can take the total $700,000 and say, look, not all of that should be 30 years. We can push a big value of it in that first 5 years. And what's really neat is there's something called bonus depreciation. And bonus depreciation allows you to take the majority of whatever's pushed in that first 5 to 7 years and get it in year one.
Oh, wow.
Yeah. So let's just give an example on this. Let's say $700,000 house, like we were talking about. Let's assume that 300,000 of that is able to be depreciated in an accelerated fashion. If we use bonus depreciation, we can push most of that into year one, which means for our taxpayers, about $100,000 savings in their taxes in year one.
Wow.
$100,000 in year one. Now, that's money in your bank account, not in the government's.
Yes.
That's your money. And the thing is, these cost segregation studies are inexpensive. We see ROIs of 10x, 20x on these cost segregation studies. So when we handle these for clients, they're super, super beneficial. Think about that. You bought $1 million property. You have $100,000 right now. I don't know what you're going to buy with it, but maybe it's another piece of property and you're increasing your wealth. And it's something I wish I would have known about years and years ago and just bought one of these every year and then used the money from cost segregation to buy another piece of property.
Yes.
So that's a good one for existing.
Again, what great advice, and not things that are talked a lot about. You don't necessarily hear about them. So I'm sure I've got a lot of docs that are massively scribbling down. Okay, ask him about this. Talk to him about this. And I'm assuming too, whether if somebody were to call you guys and start talking to you, they don't have to know the path to savings. That's your job, right? Is they can just be like, okay, I was listening to Hey Docs and I heard this, or I heard this in here. You guys can help them like pull out as advisors, correct? And how this is working.
Look, I'm a dentist, but I don't know what your wire sequence is. And you wouldn't expect me to know what that is, right? Alfonso is a tax attorney. We're not going to know your business. You would explain it to us very kindly if we asked. And that's really what our job is. We're going to go in there and diagnose. That's why we're called TaxRx. The prescription is the RX, is we're going to go in and figure out, hey, what's your entire tax situation here?
Yes.
Where are you leaving money on the table? And where can we help out?
Oh, I love this. So what do you think some of the biggest pitfalls that you're seeing? I know you've just been dropping wonderful things for us, but some of the pitfalls that practices get into with taxes.
I think as far as pitfalls go, it goes back to our question of the team. It's making sure you use the right team, you have good people on your side with taxes, and stay ahead of it. It's like your pain meds. You get behind and it's hard to catch up.
Yeah.
You stay ahead of it, you're okay. Make sure you know who you're working with. As I mentioned, with your team, cautious about, there's a lot of advertisements out there right now. We call them promoters in the industry, especially in ERC. We get these things all the time. The IRS just put the ERC on hiatus for the next few months. It's not dead, but they just said, we're not taking any more right now because there's a lot of fraud in this, and we need to make sure that people are careful about how they and who they use. And if you don't use the right group, then you can be assessed penalties. If you use a professional group, that assessment of penalties is essentially gone because you say, I relied on these guys who are tax attorneys or CPAs or what have you. Then docs don't have to be worried about that penalty piece of any questions that the IRS may have about this.
Yeah. And I'm just going to, I know the answer to it, but I just want to hear it from you. Pulling back to, because we have a lot of young listeners on this podcast. Is there a certain dollar amount that you need to be making, or you need to be doing certain amount of years in practice before you would reach out for help like this?
Yeah. Do you know where I'm going to go with this? Year one, give us a call. The thing is, we don't, we get on plenty of calls where we're just chatting essentially. If we get on there and we can't help you with an engaged service that you pay us for, you're still going to get some value out of that call. You're going
Mm-hmm.
to know what you could be doing when you do need to call us. But most people, we were able to help in some way
Yeah.
or another.
And I feel like again, this is not an area that people really want to spend a lot of time in. And I feel like so many times, and especially for younger doctors, but I see this a lot with my existing too. They get so busy in the business of doing business, these really important things become just by the wayside, right? We're not,
Yeah.
I don't have to think about it because I don't have to think about it right now. And
Yeah.
one of the things that I'm always coaching my doctors on, especially my younger ones, is if you can align yourself from the beginning, if you can put the systems in place, even though it feels very overwhelming and you don't know exactly what you're doing. When you're slower, when you're smaller, it is so much easier to get good habits in place and get good teams around you so that when you do get busy, you're covered and you
Yeah.
aren't maybe running into issues that, gosh, you should have known it was coming or you look back and go, oh my gosh, I could have been savings or what,
Yeah. Yeah.
saving this, that, or whatever.
Yeah, you just nailed it. There's a reason why they need you as a practice coach and why they need us as a tax coach, essentially like that. There are so many things out. Yes, we're all we're all capable,
Yeah.
but we can't be capable at everything all the time. There are knowledge tidbits out there. There's a lot of wisdom that you're going to have from seeing thousands of practices that you can say, hey, you're going to save yourself some headache if you do X.
Mm-hmm.
And we just come in the same way for taxes.
That's great.
So,
So if there was anything that you think docs should be aware of, maybe what coming down the line, 2024 forward, could you give us some advice on or thoughts when you're looking into the future and saying, hey, docs, we should be paying attention? Any little insights you can give us?
yeah, there was this act that came through a year or so ago called the Inflation Reduction Act. And one of the first things you learn as you get into this is that the name of the act is usually the opposite of what it actually accomplishes there, regardless of what it is or what your political standings are. But one of the things that was key to this act is some new energy credits. And if you are looking at remodeling, even if you don't own the space, if you're looking at remodeling your office building or your home or anything like that, there are credits that can go from $1 to $5 a square foot for doing things as easy as upgrading your lighting in your operatories or things like that. So there are some nice benefits that are a part of it you may want to consider if you're looking at doing some remodeling.
Mm-hmm.
Just a number of little things like that.
Mm-hmm. Yeah, that's great. That's great. This has been just a treat to have you on. And as we finish up here and we're leaving you, I'm wondering if you have any like three things that you're like, man, if I could, I've got the platform. If I could tell doctors this is what you should do or this is what you should be thinking about, would you leave us with maybe 2 to 3 thoughts?
Yeah, let's see. Put on the spot here. Let me figure out how to give you a couple of things here. I'd say one of them has got to be, as much as we've just said, you have so many other things to focus on, give this a little bit of time. When you look at the impact of taxes in your life, I wouldn't be surprised if between state, sales, federal taxes, you're closer to 50% than you think as far as your tax burden. So take a little bit of time, spend some effort on this, because if you don't, you're just going to be killing yourself working.
Yeah.
So maybe that's one big one. And the next one is remember that just like in every good thing, a couple of good opinions are very helpful with everything. Get experts out there, hear some good opinions, make your decisions. You'll find that whatever your comfort level is with whether you're traditionally what we call aggressive or conservative on your taxes, that there's a great kind of middle place that takes advantage of most of these things and keeps you in a safe harbor. And that may be where you want to find yourself.
Yeah, that's great. Great advice. Ben, I really just appreciate you. You said this, you guys are like tax coaches. And I really like that because I feel like it just seems like it's easier to approach. You don't have to, I think anytime we engage with coaches, we aren't expected to come to the table knowing everything. And I think for the most part, if we're engaging with somebody, they're going to come alongside us and help us. And I feel like this is such an area that can be scary, as we talked about from the beginning. It can maybe even make some doctors feel, gosh, I should have known this. But really, like, how should you have known this unless you took Ben's path and went to school to become an attorney on top of it all? Yeah.
Don't do that. Don't do that. Yeah.
So I just am so thankful that you guys are out there and helping docs. And I am sure that you're going to be getting a lot of calls and a lot of people reaching out, and especially just for enlightening us a little bit that if you are a younger doctor out there, if you're out there listening, it doesn't hurt. It's just a phone call that could really set the tone for what your next 20 years in business looks like, and really what your tax burden potentially looks like, and hopefully what your savings look like along the way. So if somebody wants to get a hold of you, what's going to be the best way? How did they make that first step?
Yeah, so probably the easiest is just go to our website. It's taxrx.com. One of the things you'll see right on that hero, that first part of the website, is our calculator on there. And you can go ahead and just put in a little information when you started your business, and it'll take you through just about everything I talked about today and give you a value estimate on this. You can schedule with us when we go into that meeting. At the end of that calculator, it has a schedule option, and that gives us a starting place when we go into a meeting with you. And like you said, Jill, our goal is, we know we won't be a fit for everyone, but everyone should come away with a little tidbit of knowledge, and we're happy to share that. At the end of the day, being a dentist and an attorney means that these guys are, we're talking to my colleagues. Yes. I get it. I'm happy to be just a resource in any way we can be.
Yeah. That's wonderful. Thank you so much for being there and meeting a need in our industry. I think you come at it from a very different perspective than maybe some other groups do. And I think we can all appreciate that. So thanks.
Thank you, Jill.
As we finish up here, one of the things that I love to do on Hey Docs, you may not know this, is I like to do a little speed round.
Oh.
Again, I'm going to put you on the spot one more time. So here we go. Are you up for the challenge?
Find out.
All right. How about describe your style in one word?
I'm focused.
Oh, focused. All right. What are you listening to or watching?
Podcast Art of Manliness is probably one of my favorite ones. Yeah.
Awesome. That's great. Yeah. Anything you do just for you?
I read really non-excellent science fiction. Just to escape. Cotton candy for the brain.
I am so right there with you. Sometimes you just need that total, whatever genre of nonfiction you're into. That is me for sure. I love that. All right. Any hidden talent you'd want to share with us?
I'm pretty good at drawing.
Oh, so, nice. Nice. Yeah. I always wanted to be good at that, and I am not. I can barely make a stick man look like stick man. So I'm always very impressed with that. And then finally, big, hairy, audacious goal.
Oh, that's a great one. We saved our orthodontist about $12 million in taxes in 2022. Shoot, let's double that. Let's double that for this next year.
Yes. So. Yes. Oh, that's wonderful. Ben, it has been just an absolute pleasure having you here on Hey Docs. And I just really appreciate you taking time out to give us just some really good nuggets of information. So thank you. And I hope to have you on the show again.
Thank you. It's been so fun.
Yes.
Catch you later.
All right. See ya.
Bye-bye.